It seems as if the drop that we saw in November CPI was largely due to vegetable prices coming off the boil. But considering that vegetable prices and food prices in general can be quite volatile, how much of this do you think is a sustainable move to the downside in CPI inflation?
Well, thank you for having me on the show. But when you look at the inflation numbers, it's a very positive print, given that it's around 40 bips lower than what the street was expecting. And you highlighted it correctly that it's vegetable prices which is falling, which is food prices which is falling. Even within that, I think one of the points that should be noted is that the other food prices are not coming down as sharply. If you look at cereals, which has the largest weight, which is basically rice, wheat, and things like that, that is not coming off sharply. In fact, on a month-on-month basis, it has been increasing. There are other food items, protein-rich food items, which has been increasing. And that, in effect, keeps the food inflation alive. And that is a point of concern because that can have second-round impact and can go on to impact other aspects of inflation too. On the other hand, if you look at the core inflation, that has continued to remain extremely sticky at around 6%. And that is a concern if you are looking at the inflation trajectory going forward, because that has implications then for the monetary policy. And that, in some sense, is what the concern would be, that inflation on a sustained basis with one print coming below consensus does not mean that, on a sustained basis, we are very comfortable on the inflation front just yet.